This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, August 12, 2026, and this is the New York session. Now, let's get into it. Bitcoin is hanging by a thread at $63,000, and the market is in a state of absolute panic. The Fear and Greed Index has crashed to 14, deep in extreme fear territory, signaling that 8 out of 10 assets are currently bleeding. With Bitcoin futures demand hitting lows not seen since 2024 and Solana testing critical technical support, the question isn't just about fear, it's about whether this capitulation has found a bottom or if we are still falling. Let's look at the data. Before we dig into the charts, here is what is moving the needle today. First, we have the Consumer Price Index on Wednesday, August the 12th. This is the big one for inflation expectations, and given the sensitivity of crypto to macro data, a miss here could exacerbate the current sell-off. Then, on Thursday, August the 13th, we get both initial jobless claims and the Producer Price Index. Finally, on Friday, August the 14th, retail sales and business inventories round out the week. For crypto, these are all inflation and economic health proxies. Apex, what do you want to watch for in this data?
The key for me is the gap between the CPI print and the PPI. If PPI comes in harder than expected while retail sales soften, it confirms a stagflationary scare, which is toxic for risk assets like Bitcoin and Solana. I'm watching for any divergence that suggests the Fed might have to hold rates higher for longer, especially with the current target rate at 3.5 to 3.75%.
Let's look at the board. Bitcoin is down 0.3%, trading at $63,364. Ethereum is flat, down 0.1% at $1,875. But the pain is widespread in the alt space. XRP is down 1.1% near the $1 mark, and Solana is off 0.6% at $75.43. The biggest loser today is Dogecoin at negative 3%, trading at 7 cents. The broader sentiment is captured by the Fear and Greed Index at 14. We have a rising 7-day trend, but the current mood is pure capitulation. Let's talk headlines. CoinDesk reports that U.S. Senate housing bill includes a CBDC ban. That is a regulatory win for privacy advocates, but does it move the needle on price? Pulse, how is the crowd reacting to that? Honestly, the crowd is too scared to care about legislative wins right now. When the Fear and Greed Index is at 14, people aren't reading the fine print of housing bills. They're watching their portfolios bleed. The sentiment is so negative that even positive news gets ignored or interpreted as a trap. Another headline, Bitcoin futures demand falls to 2024 lows. Are institutions exiting the market?
This is the structural issue. We are seeing a genuine withdrawal of leverage. When futures demand collapses to those levels, it means the big players, the ones who usually provide the bid during dips, have stepped away. It's not just retail panic, it's institutional caution.
And that is the risk no one is pricing in. With institutional demand dry, we don't have a buyer of last resort. That means any further technical breakdown in Bitcoin could trigger a cascade of liquidations without anyone there to catch the falling knife.
Let's start with the anchor. Bitcoin is at $63,364. Grid, what does the structure look like right now?
The structure is fragile. Bitcoin is consolidating below the key resistance that was broken a few sessions ago. I am watching the 63,000 level as immediate support. If that breaks, the next level is the low from the recent daily history, which sits around 61,500. There is no volume confirmation on the upside yet. Every green candle is being met with sell pressure.
And the flows confirm that sell pressure. Stablecoin inflows to exchanges are picking up, which usually precedes spot selling. We aren't seeing the accumulation patterns that typically signal a bottom. The whales are holding cash, not buying the dip.
It's not just the whales. Social sentiment is at a fever pitch of negativity. Reddit threads are dominated by complaints about liquidations. When retail is this angry, it's often a contrarian signal, but right now, the anger is driving the price down. The crowd is waiting for confirmation of a bottom before they enter, and that confirmation hasn't arrived.
Let's move to Solana. Solana is down 0.6%, trading at $75.43. Grid, how does Solana compare technically to Bitcoin?
Solana is weaker. It is trading below its key moving average support, which is acting as dynamic resistance now. I am watching the $74 level. If Solana loses that, we open up a gap down toward the $68 range. The relative strength of Solana against Bitcoin is deteriorating, which suggests alt-season liquidity is fleeing to safety or exiting entirely.
On-chain data shows activity on Solana is slowing. Transaction volume is down, and TVL across the major protocols on Solana has decreased. When the utility drops, the speculative premium evaporates. The network health metrics are telling us that the hype cycle has paused.
And let's not forget the volatility risk. With the VIX yesterday closing at 15.46, implied volatility in crypto is actually higher than in traditional markets. Solana is a high beta asset. In this risk-off environment, it doesn't just fall, it falls harder and faster. The risk/reward here is skewed heavily to the downside.
XRP is trading at $1, down 1.1%. This is a psychological level. Grid is $1 holding.
It is touching, but it's not holding cleanly. $1 is a massive psychological barrier, and we have seen multiple wicks below it in the last few days. The structure is bearish short-term. I am watching the 195 cents level as the next support, but the immediate trend is down. Unless we see a daily close above $1 with volume, this is a bear flag.
The sentiment on XRP is particularly toxic. There is a lot of noise around regulatory clarity, but the market is ignoring it. The crowd is treating $1 as a ceiling, not a floor. Every time it bumps into $1, sellers step in.
Flows on XRP are neutral to negative. We aren't seeing the large wallet movements that usually accompany a breakout. The stablecoin pairs on XRP are seeing reduced volume, indicating that traders are staying on the sidelines.
Finally, Dogecoin, down 3% at 7 cents. This is the canary in the coal mine for speculative assets. Grid, what is the setup?
Dogecoin is in a clear downtrend. It is broken below the support line from last week. I am watching 6 cents as the next key level. If 7 cents breaks, the drop accelerates. There is no technical basis for a bounce here, it's purely momentum-driven selling.
This is the bubble deflating. Dogecoin has no fundamental yield, no utility, and no institutional backing. When fear is this high, speculative assets get sold first and hardest. The news sentiment is neutral, but the price action is screaming that there is no demand left at these levels.
Let's bring it all together. Apex, how do we synthesize this? Bitcoin is holding 63,000, but futures demand is gone. Solana is breaking structure. XRP is failing at $1. Dogecoin is bleeding. What is the unified outlook?
The data is consistent. We have a regime of extreme fear where technical breakdowns are confirming flow data. Grid observation on Bitcoin's support at 63,000 is being tested by CIPHER data on institutional withdrawal. Pulse read on retail anger is being validated by SPECTER warning about high beta assets like Solana and Dogecoin getting crushed. There is no divergence here. The market is telling us that the path of least resistance is down. Until we see a catalyst, a rate cut, a policy shift, or a major buyer, the fear is likely to persist.
To summarize, Bitcoin is testing $63,000 with weak volume and drying institutional demand. Solana is breaking key support, signaling weakness in the alt market. XRP is struggling to hold the $1 psychological level, and Dogecoin is leading the sell-off in speculative assets. The key watch for tomorrow is the CPI release on August the 12th. If inflation data comes in hot, we could see a further acceleration in this fear.
My weekly call, Bitcoin bearish, target 61,500 by Friday. The extreme fear sentiment of 14 suggests we haven't seen the final capitulation wave yet.
My weekly call, Solana bearish, target $68 by Friday. The technical structure is broken, and without a volume-backed reversal, the path of least resistance is lower.
My weekly call, Bitcoin bearish, targets 62,000 by Friday. Stablecoin outflows and weak futures demand indicate that smart money is reducing exposure, not accumulating.
My weekly call, Dogecoin bearish, targets 6 cents by Friday. With volatility rising and speculative interest dead, Dogecoin has no floor. It will test the next support level.
My weekly call, Bitcoin neutral, targets 63,000 by Friday. While the short-term data is bearish, the macro regime is still risk-on. I expect a consolidation range rather than a crash, but the bias is to the downside.
So, the consensus is bearish on Bitcoin, Solana, and Dogecoin, with a neutral view on Bitcoin's weekly range. We'll see if the CPI data shakes out the weak hands or drives them further into the ground. If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Crypto markets are highly volatile. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.